The corporate income tax rate in Denmark is 22%. However, it's important to note that tax rules and regulations can change over time, and you should always verify the current corporate income tax rate with the Danish tax authorities or a professional who is up to date with the information. There are also several points regarding corporate income tax in Denmark that are worth mentioning. The standard rate, as I said, is 22%, and it's levied on the net taxable income of a company. So this means that company gross income is reduced by deductible expenses to determine the taxable base, and this base is profit. So basically the company does not pay the tax from the income, but there is an income, there are the costs, and the remaining amount is a profit, and that is something that the tax is paid from. Common deductions include operating expenses, depreciation or interest expenses, and the gains are usually from the sale of goods or services. Denmark has an extensive network of double taxation treaties also with other countries, and they can affect how international businesses are taxed on the income. So it's not always that straightforward. Danish tax law allows also companies to carry forward tax losses for a certain period of time to offset future profits. So if you have a loss in the business in 1 year, you can offset it from the profit in the next year. This helps reduce tax liabilities in the profitable years following the unprofitable years and ease the life cycle of business. Also, Denmark is imposing withholding tax on certain types of payments made to non-resident individuals or entities. The rates can vary depending on the nature of the payment and the existence of and basically the tax treaties. Also, Denmark has a group taxation systems that allow affiliated companies, especially holdings, to be taxed as a single entity, which can have advantages for tax planning. For instance, if you're having a franchise in the food industry and you have 5 different franchise and different franchise points, let's say a food chain, and one of them is giving the profit and the other one is not, you can put them as one whole company and offset loss with profit. And also the same is with holding companies. People use holding companies to offset the business cycles among different industries. And the Danish tax authorities scrutinize transfer pricing to ensure that transactions between related entities are conducted with the Danish law. So if you have transactions between connected entities, make sure that this is according to the market rules. Tax laws can generally change and each company situation is different. I would advise you to always check with a tax advisor or an accountant who is specializing in those areas to make sure you're up to date. And if you have any questions about doing business in Denmark, feel free to get in touch with us. Thank you for watching this video. We always gladly share our knowledge and experience, and we wish you best of luck with your business in Denmark.